Welcome to you, my dear children. This is the last part, very last part of Unit 8, Cash Book and Petty Cash Book. The Unit 8 of your syllabus, Cash Book and Petty Cash Book. In this chapter, we are gonna start one question from the Petty Cash Book. We are gonna do one question, a Petty Cash Book, and finish it off, right? This will be an example question which is given in your textbook, page number 107. Afterwards, we are going to take one more activity, which is not an example, which is an activity, and both of us, you all, together with me, both parties, you and me, we can do this question, the next question, which is the activity in your textbook. Let's see. This is an example. What's given here? It says petty cash imprest was 2000, which was received on 1st March 2021. All right. Now, as you know, children, the petty cash system is practiced, or it is done by most of the businesses. Petty cash system, in order to manage and carry out their small daily expenses, everyday small expenses, most of the time, which are not considerable. To manage and to carry out these expenses or payments, petty cash system is adopted by most of the business organizations. All right. Last session, we learned about the petty cash imprest system, petty cash imprest, and I told you that it is also known as the petty cash float. That is the full sum of money, right? The total sum of money which is handed over by the main cashier to the petty cashier. The full sum of money, the full amount handed over by the main cashier to the petty cashier in order to do the petty cash expenses. That is called the petty cash imprest, right? So as the petty cashier does all his petty cash payments during the month, the imprest goes down, the imprest decreases gradually, right? So the petty cash expenses, when the petty cash expenses incur every day, the petty cashier pays for the petty cash expenses, and for every payment he has to issue a receipt. He has to issue a receipt with his signature, and the receipt is the proof that he has to prove he did or he paid for this certain expense, right? You remember, right? We talked about, we discussed about all this. The petty cash receipt? No, not the receipt. Not petty cash receipts, petty cash vouchers. Petty cash vouchers. Pay attention, right? And keep these things in your mind. Petty cash is a system which is set up or which is organized in order to manage the small daily expenses of a business. And for the petty cash system, or for petty cash payments, the source document which is relevant is the voucher, petty cash voucher. The petty cashier issues a voucher for every petty cash expense. Yeah, that's right. So the things that we did in the last session, a quick recap, and reimbursement of petty cash interest also was discussed in the last session. I hope you remember all these things. With that knowledge, we can take on a question and prepare a petty cash book. You must bear the important things in mind. Otherwise, preparing accounts or preparing the relevant books of accounts, it's gonna be a little difficult if you don't know the parts relevant, the knowledge, the theory. Yeah, you get my point. All right, let's just look at an example first. Then we'll take on a question. Petty cash interest was 2000. It was received on 1st March 2021. All right. So 2021, we are going to look at how the petty cash expenses are recorded in the petty cash book. These are the petty cash expenses given. Petty cash expenses given to you. All right. Right, you see. And the interest is 2000 rupees. That is the total amount of money which is handed over to the petty cashier by the main cashier at the beginning of the month. Yeah, that's right. Okay. With that interest 2000, he has done all these petty cash payments during the month. All these petty cash payments during the month. All right. Okay. First payment, postal charges. All right. Postal charges. That is done on first. No, it's not first. It's 4th March. He has paid from voucher number 1. This is voucher number. See, he has paid from voucher number 1. Yeah, for postal charges. And how much? How much has he paid? 120. He has paid 120 for postal charges. Maybe for stamps, maybe for envelopes, maybe for posting letters. He has paid 120, the petty cashier. Then next day, 5th of March, traveling expenses. He has paid 160 for traveling expenses. He has paid 160. Then refreshment expenses, then stamps, then traveling, Vimukti. Something here with a name to Vimukti. He has paid an amount of 200 to a person called Vimukti. We don't know who Vimukti is, all right? We don't know. Let's see. Then treasury charges 240, carriage inwards 200, refreshment expenses 180, pens and pencils 150, cleaning expenses 200, and finally expenses reimbursed. Expenses reimbursed. You know what is a reimbursement? I'm not going to explain again. All right. Now let's see how these expenses or payments are recorded. Yeah, all right. First, voucher number 1, postal charges 120. All right. Voucher number 1, postal charges 120. There we go. We have the petty cash book. All right. Children, I have very clearly mentioned this fact. When you draw the petty cash book, you should know what are the debit and credit sides. Debit and credit sides. You should know. All right. Debit and credit sides. What is the debit side? What is the credit side? Do you know? Do you know? Who knows? Tell me if you know. Which side is the debit side in this book? Which side is the debit side? From where should I draw the dividing line? Is this the dividing line? No? All right. Is this the dividing line? Next to the description column? Or is this the dividing line? And this side is debit, that side is credit. Is it? Yes, children. It actually has not mentioned, the book, it has not mentioned actually from where the debit side is divided. Sometimes it doesn't matter, but you should know that this side is the debit side and that side is the credit side. In other words, debit in the left, credit in the right. Debit in the left, credit in the right. So debit side, you can assume that the dividing line is here. The dividing line is here. All right. Can you see this? Just a little bit of clarification for a question which is frequently asked. Children ask from where, from which line, from which vertical line is the debit side and credit side divided? From which line the two sides are divided? People ask, students ask always these questions. Just to clarify that. All right. So if that is the dividing line, the vertical line, this is the top line, the top horizontal line. All right. Okay. There you go. There you go. And the credit side has the most of the space of the account. Most of the space is given to the credit side because all the payments are credited to the petty cash book. Credited. Yeah. Afterwards, children, you can draw the headers, the row for headers. Keep the header row, the row for headers, a little wider. You know what I'm talking about? Wider means make it bigger, the row for headers. All right, the row for headers. Likewise, the book is drawn, and in the credit side, children, we have analysis columns. Some say analysis, some say analysis, it doesn't matter. Analysis columns. When analysis columns start, the header row or the row for headers is divided into two sections. Likewise, the row for headers, the headers is divided. This row is divided into two sections. See, 1, 2. And the below section, in the below section, the names of required analysis columns or the required analysis columns or analysis columns are drawn in the below section, or this section is entirely dedicated for the analysis columns. All right. Right, that is about the drawing of petty cash book. Description column, voucher number, payments. There is a separate payments column, separate column for payments. All right. Likewise, payments column. Next to the payments column only, you get the analysis columns. Next to the payments column, this is the payments column. Next to it, you get the analysis columns, analysis columns. All right. And children, the description column is common to both sides, to debit and credit sides. This description column, children, this is common to the debit side and to the credit side too. There are no separate description columns to the debit side and to the credit side. No two description columns. No two columns. Only one column. That is common to the debit side and credit side, both sides. All right. That's about it. If you want to clarify this, if you want to have a clear idea about this, the drawing of petty cash book, remember, debit side is for cash receivings. Just like the cash book, cash comes into the debit side. That is why there is a received column and only that received column in the debit side. That is why only the received column is in the debit side. This column is for cash receivings, right? Then ledger folio, which is not actually used. This column is not actually used, okay? The ledger folio column. From those two columns, debit side is over. Debit side is divided, and the entire section on the right hand side is credit side. All right. There you go, children. Debit and credit sides. Let's go to the question now and look at the examples, the payments, and how they are recorded. First, 4th March, this transaction. 4th March, voucher number 1, postal charges 120. Let's look at that. Children, first of all, before we go and record the postal charges, can you see there is one entry at the very top? Can you see this? Can you see this? This is the petty cash imprest, children. This is the petty cash imprest. I'll move to this side for better viewing. The very first, on the 1st March, at the very beginning, 2000 is on the debit side. 2000 is on the debit side. In the received column. This is the petty cash imprest received from the main cashier. That is received on 1st of March. 1st of March. Yeah. As I have mentioned earlier, the only receivings in the petty cash book inside the received column, the only receivings are receiving the petty cash imprest, and petty cash reimbursement at the end of the month. These are the only receivings. There are no other receivings. All right. In between, children, there are no other receivings in the petty cash book. Okay. So the imprest is received to the petty cash book and it is recorded in the received column. The double entry for this, I want you to tell me. What is the double entry for this? I'm talking about this double entry for this. The double entry for petty cash imprest received. Now you already have one entry, children. You already have one entry. This is the entry. Petty cash book, debit 2000. So the debit entry is already there. It's already there. It's already in the book. The debit entry is recorded. Where does the credit entry go? Debit the petty cash book, credit. Okay. Can somebody tell me the credit entry of this 2000? Debit the petty cash book, credit the cash book. That's right, because the main cashier hands over or gives this amount to the petty cashier, which means from the main cashier, from the main cash, 2000 decreases. 2000 goes out from the cash register, from the cash till. That 2000 only comes to the petty cash book. Got it? Right. Let's see whether the double entry is recorded. It is recorded. The cash book, 1st March, description petty cash 2000. So the double entry is recorded in the cash book. Cash book. All right, children? Simple things, right? Simple things. Next, now let's go and check our expenses or payments. Next, we have the 4th of March, postal charges, voucher number 120. You must record the 120, the amount of the payment. Payment is the first payment. This is the payment. All right. You must record the amount of the payment first in the payments column. You must record in the payments column. Then in the relevant analysis column. Got it? First, the amount or the payment amount should be recorded in the payments column. That is this payments column. Then the amount, the same amount should be recorded again in the relevant analysis column. So every payment amount goes to 2 columns, recorded in 2 places. That should be done. Right? Likewise. Children, recording of payments is just about that. Right? Let's check the next payment. We have 5th. The next payment is on. The next payment is on 5th. Yeah. Voucher number 2. Traveling expenses 160. Traveling expenses 160. All right. Now let's check. 5th. Can you see? 5th. Traveling expenses, you can just write traveling in the description. And voucher number, you have to put the voucher number. See the voucher number 2. Amount in the payments column. Then again, the same amount in the relevant analysis column. In this petty cash book, children, there are 5 analysis columns, but in your exam they will definitely tell you how the analysis columns should be drawn. Okay, in the exam question they give you, normally they give you what analysis column should be drawn. You can't draw any other analysis columns other than the given analysis columns in the question. Example, if the question says prepare the petty cash book with analysis columns for postal expenses, traveling expenses, entertainment expenses and miscellaneous, you can't draw another analysis column called cleaning expenses. No, you must draw only the given analysis columns. Just like here, there are 5 analysis columns: postal, traveling, entertainment, miscellaneous, and ledger account column. All right, we'll check another transaction. The next one, 8th transaction, 8th March, voucher number 3, refreshment expenses. I told you that refreshment expenses normally refer to the tea and coffee, children. It's a necessity in any working environment. People are used to have a tea and they are, they are asking for a break every once in a while to have a tea. Refreshment expenses refer to those tea and coffee expenses. And we have spent 260 for refreshment expenses. All right. Let's go and check how the refreshment expenses are recorded. All right. 8th March. Refreshments is the description. Voucher number 3. Put the voucher number in the voucher number column. All right. Then 260, the amount is recorded in the payments column. Again, the same amount is recorded in the relevant analysis column. In this case, the analysis column is entertainment expenses. Entertainment. In the last session, I was answering a question that is frequently asked. Some students ask me, Sir, Prabhat sir, what is the meaning of entertainment expenses? What type of entertainment activities businesses and petty cashiers spend their money? Yeah, are they going to watch movies every once in a while? No, children. Entertainment expenses refers to those refreshment expenses. Okay, that's what it means. So you put the refreshment expenses in the entertainment column. Okay. Yeah, right. All right. Likewise, we record all the payments in the relevant analysis column. Stamps 140. This should go to normally the stamp, and postal expenses go to postal expenses column. Okay. Then we have traveling expenses 60. Traveling expenses should go to voucher number 5. Traveling, that should go to the traveling expenses column. Then we have the next entry, to Vimukti. This is something that I wanted to explain. That's why I kept it circled. All right. There is a payment to Vimukti, children. There is a payment to Vimukti. Who is Vimukti? Who is this guy? Do you know Vimukti? I don't know Vimukti. Do you know? See, we don't know who Vimukti is. We don't know, but the petty cashier has made a payment to Vimukti. Right. In this case, children, there is something that you must bear in mind. Payments to individuals, people like Vimukti, normally these payments do not go to any analysis column. These payments, that's right, these payments should go to the ledger accounts column. Yeah, some of you knew that, right? Yeah. Payments done to individuals, people. If you get a name in the petty cash payments, among the petty cash payments, if you get a name, it's like Vimukti, these payments should not be entered in any other analysis column. They should be entered in, see, the ledger accounts column. All right, something to remember. All right, because I'll tell you the reason. Because most of these names, individuals, are creditors, small time creditors of our business. We are owing money to them. You know, let's say there is a mason guy, or a plumber who regularly comes and offers his service. I mean, we are in need of his service. Let's say a plumber called Vimukti. Okay, in our business premises, in the building or in the shop or in the showroom, there is a washroom which is always leaking, right? It's smelly and it is wet and it's filthy. So we need the service of this plumber to get this sorted out. Okay, things like this happen always in any premises, in any building. There are always events occurring, such as pipes leaking, electricity wiring issues, these type of small renovations always occur. So in this business, in this organization, there is a washroom issue, which is a leakage, right? Vimukti is the plumber. The plumber, when we call him, definitely he comes. He always comes on time and he fixes these problems. And he doesn't even sometimes wait until we pay him. He just comes and fixes the problem, and he says, he tells the manager, right, hari mahataya nang bata tika okkoma hari, everything is done, and he leaves. But we have to pay him for his service, right? So in this type of a case, the bookkeepers keep an account open for this guy, because he's a small time creditor. He's not a main creditor of the business, but a creditor, because we have to pay him money, right? Yeah, so he has a separate account for himself. That's why we put this amount, which is paid to him, to the ledger account column. All right, remember, children, if a payment is made from the petty cash expenses or from the petty cash, the payment is made to a person with an individual name, that payment should go to, not to any other analysis column. The payment should go to the ledger account column. All right, that is done. Next payment. What is the next payment? Voucher number 7, try-show charges. Guess to which analysis column this should go. Try-show charges. Of course, obviously, traveling expenses. 240 try-show charges should go to 240 traveling expenses. Let's just check what other expenses are there. One more is there. Carriage inwards 200. That has been entered in the ledger accounts column. This 200, see, that is also in the ledger accounts column. Why is that? Now it's not a payment to a creditor, not an individual name, not a creditor. Why is this entered in the ledger accounts column? Children, these are carriage inwards. Carriage inwards normally occur when assets are brought, and brought to the business, non-current assets. You know, carriage inwards means transporting the non-current assets to the business premises from the harbor or from wherever we bought the asset. We have to transport these non-current assets such as machineries, plants and machineries, motor vehicles, non-current assets, machines such as cash registers, huge, large air conditioning machines, equipment such as exhaust fans and equipments which are needed in a factory, furniture. These type of non-current assets should be brought to the business. To bring them, to transport them, transport expenses are called carriage inwards. So these carriage inwards should be added to the non-current asset cost. That non-current asset is having a separate account, a ledger account. That is why these carriage inwards charges are entered not in any other analysis column. Carriage inwards also should go to the ledger accounts column because these carriage inwards has a separate ledger account for them, just like these creditors. Vimukti. All right. Okay. Done. Then we have refreshment expenses. Okay. That is going to entertainment column. Yeah. Finally, we have pens and pencils. Pens and pencils should go to miscellaneous column because there is no stationery column. All right. That is how you record, children. Finally, there is another one. Yeah. We recorded carriage inwards. We recorded refreshment expenses and pens and pencils. Finally, cleaning expenses. 200. To which column should you think cleaning expenses should go? Oh, the petty cash book. Cleaning expenses. Well, it has been entered to miscellaneous column because there is no separate cleaning expenses column. Any other expense or payment which cannot be entered in the respective column for a payment, if there is no column to enter, there is no analysis column, what to do? You enter those payments in the miscellaneous column. Okay, just like pens and pencils, it's in the miscellaneous column, and cleaning expenses also in the miscellaneous column. All right, done. Okay, we are done. We are down to balancing part now. We have to balance the petty cash book. Balancing, right? how to balance this? Now it is a kind of a different format, not like a ledger account. Yeah, how to balance this, children? Those who know how to balance the petty cash book. All right, I'll just explain once the balancing part. Okay, pay attention. This is what we do. First of all, we take the received column, which is this one, and the payments column is this one. I hope you can see this. Let me clear out these unnecessary drawings, then it's clear. Okay. Yeah, right. Now it's kind of clear to you. This is how we balance a petty cash book, right? Just like balancing a ledger account. Children, nothing new, okay? First you guess from the debit side and from the credit side which side is having the greater total. To guess which side is having the greater total, you must look at the received column. All right, and payments column. These columns only you check. Now, obviously, very clearly, in the received column, there is a 2000. This is the impressed amount, the 2000. And in the payments column, when you add up all the individual payment amounts, when you add up all the individual paid amounts or payments, like 120, 160, 260, 140, 60. Likewise, when you add up all these individual payments made, you get 1910. You get 1910. All right. So the greater total is obviously in the received column, which is 2000. What you do is, children, you put the greater total or the higher total, and like is clearly visible, the higher total 2000, you put that total in the sum box. Sum box means children, this total box, right? Which total do you put? Which total do you mention? You mention the received column total in the sum box. The same total should be in the payments column sum box. So 2000 in the received column and 2000 in the payments column too. All right, first step. Second step, take the total of the payments column, mention it underneath. underneath the payments column, underneath all the payments, mention the payments column total. Second step. Third step, get the difference between the received column total and the payments column total, which is 2000 minus 1910. 1910. All right. Take the difference. The difference is 90. This 90 becomes the balance of the petty cash book. Balance of the petty cash book. You have to mention it. You have to mention it right here. As the balance carried down. This is the balance carried down. 90 is the balance carried down. Got it? This balance carried down 90 again should be brought forward. Now, children, the total of the payments column here, okay, then subtract this from the received column, or the 2000 total of the received column, and difference is mentioned just on top of the sum box, that is the 90. Yeah, so 90 is the balance balance carried down. That balance carried down should be brought forward to the debit side again. That is what I tried to show from this arrow. This 90 is the balance brought forward to the debit side. You write balance brought forward in the description column. That is done on the 1st of next month. The date should be the 1st of next month. Just like a ledger account, children, just like a ledger account, the balance carried down, or the remaining amount of this month, is brought forward to the next month as the balance brought forward. Okay, right. So if the petty cashier is having 90, at hand remaining, how much should be refunded or reimbursed by the main cashier? How much? Of course, the reimbursement should be the amount which was spent. Spent amount, the spent sum of money which was spent by the petty cashier should be reimbursed by the main cashier. All right, that is the reimbursement which is given by the main cash to the petty cash on the beginning of next month. Right, beginning of the next month, the reimbursement. I'll just write the word reimbursement for the amount reimbursed. This is the amount reimbursed. Reimbursed. 1st of April is the beginning of next month. The amount which was spent, this amount was reimbursed, has been reimbursed. Okay? Are you clear with this? Hope it is clear. Right. Now children, we have to record the double entries, of course. We have to record the double entries. Yeah. We checked how this impressed amount which was debited to the petty cash book, how it was entered in the cash book credit side. And now let's check how the reimbursed amount, which is this amount, debited in the petty cash book, how it is credited in the cash book. It's here children. 1st of April, petty cash credited in the cash book. Alright, credited in the cash book. So the double entry is done. Debit the petty cash, credit the cash book. Alright, now do you think all the double entries are done and the petty cash book is completed? Done deal? No, we did not enter the double entries of the payments. Did not enter the double entries of the payments. Let's go and enter the double entries of these payments in the relevant ledger accounts. Right. First analysis column is the postal expenses column. Take the total of the postal expenses. Take the total of the postal expenses. Take the total of the traveling expenses. Take the total of the entertainment expenses. Entertainment 440, and finally take the total of the miscellaneous expenses column 350. Okay, take the totals of all these analysis columns. Take the totals and debit these totals to ledger accounts dedicated or drawn separately for each of these expenses. Draw separate ledger accounts for each of these expenses and debit those separate ledger accounts with the column totals. Alright, let's take the postal expenses first. 260 is the total of the postal expenses. That means we should have a separate individual account called postal expenses or postal charges. To this ledger account, debit that 260 and it's done. Next analysis column, traveling expenses. We have a total of 460. Draw a separate individual account called traveling expenses and debit that 460. Description, petty cash. Description, petty cash. Next analysis column, entertainment column, total is 440. Draw a separate individual ledger account called entertainment expenses account. Debit that 440. Description, petty cash. Finally, draw a separate miscellaneous expenses account, ledger account called miscellaneous expenses. Debit this 350 to that miscellaneous expenses account. 350 debit. Description, petty cash. Done. Done. Now all the analysis columns, postal column has a separate account called postal account. Traveling column has a separate account, ledger account called traveling expenses account, and entertainment column has entertainment expenses account. Miscellaneous column has miscellaneous account. All the column totals are debited, right, to the relevant account. Children, finally we have the ledger account column. You don't draw one separate ledger account called ledger account, which means you don't draw a separate individual account for this column. Okay, this column is named as, what is the name of it? Ledger accounts. The column name is ledger accounts. So you can't draw a T account or a ledger account called ledger account. For this name, you can't draw a separate individual account. There are accounts already, there should be accounts already for each entry. That means for Vimukti and for carriage inwards. For each entry which is in the ledger accounts column, for each entry you should draw separate accounts. In other words, Vimukti's account and carriage inwards account. So finally you can debit Vimukti's account 200 and carriage inwards account 200. There you go. 200, 200, both accounts, same amount. I mean, according to the example, the same amount is given. So description is petty cash. Now children, the drawing of the petty cash book, right? Recording of petty cash, impressed receipt, petty cash impressed receipt. Finally, taking the difference between the impressed received amount and the total spent amount and calculating the balance amount. That's also done. Recording the payments in the relevant analysis column. Yeah, that is also done. Balancing is also done. Then what is left? No. All that is necessary is done regarding the petty cash book. Alright. So children, petty cash book and preparing the petty cash book, recording the petty cash payments, and balancing the petty cash book. Finally, reimbursement of petty cash. Reimbursement of petty cash, which is here. Reimbursement of petty cash. All right. With that, the petty cash book and the preparing of petty cash book is explaining of it, and the learning part is done, children. I hope you learned. I so much hope that you learned how to prepare the petty cash book. We have one more exercise to do in this lesson. I mean, in this unit 8, the final in the final pages of your unit, there is one more exercise. Activity 5. We can do that activity, and we will furthermore practice how to prepare a petty cash book. That is done in the next session. So I hope to see you in the next session, children. Have a great time. Hoping to see you again. Thank you very much.